everyone. It's Nikki Shelton with Keeping It Real. I'm having a hard time already talking today. Hi, Carrie. How are you doing?
Doing good.
All right. We're back to the rain again.
Yes.
It was so nice the other days. It was like you could go outside and go for walks. It was just beautiful here in the Pacific Northwest. Back to the rainy season. We got another, 10 days, and then we should be good to go.
Yes. Fingers crossed.
Yes. You guys, last week we started talking about home insurance a little bit, because when you're buying a new home, one of the first things you have to get when you're going through the process is to get home insurance. We've been hearing a lot of issues about people not being able to get insurance, and or it's really expensive now, and that's kind of changed a little bit in the last year or so. And so today I'm really excited to announce we have a special guest. We have Jennifer on. I'm bringing Jennifer on. Hi, welcome, Jennifer. How are you?
I'm good. How are you?
Great. So let's go ahead and tell me a little bit about yourself and, how long you've been in business, that kind of stuff.
Okay. So my name is Jennifer. I own a brokerage agency in Silverdale, and I have been doing insurance for about, a little over 20 years now. So I have seen so many ups and downs, but so much more change in the past 3 years than I have ever seen in the entire 20 years. So it's interesting. Definitely a roller coaster.
So I'm really
Jennifer, I want to highlight that one of the unique things about you is that you are a brokerage. You are not a one-stop shop.
Yes.
Can you explain what that means?
So I have access, like some companies, like you have your Allstate agent, your State Farm. So they typically have access to just their products, State Farm letterhead. Versus with myself, I don't work for a specific insurance company. I work specifically for the client. So my job is essentially a liaison between shopping around for client, the carriers and the clients. So while you have a lot of consumers, I'll go online, I'll shop around, they get bombarded with all these phone calls. So my job is to help, ease that stress. I'll shop for them because I have access to over a dozen carriers, from Progressive to Allstate, Safeco, Travelers, and we're consistently adding more carriers to the lineup. And just to kind of, create more options for clients, because in this day and age, options are usually what's best.
Right. So I have a question. So, obviously we're going to be talking about home insurance, but do you do other types of insurance?
I do. So we do from commercial insurance, life insurance, disability insurance. We have a portion of the firm that does retirement planning and wealth management. So I have my partner for that one, Sarah Rasmussen. So she takes care of that. She's been in the industry for, 25 plus years. And she's the director of finance for C1 Wealth Management. And so we have a full running team. It's amazing.
Very nice. Well, I'm super excited to have you on today because, I'm on all these different groups and stuff like that. And a big topic lately has been the cost of premiums or not being able to get insurance. And so before I'm removing the banner, just so that way we can get up a little bit so you can see us a little bit better, I'm going to go ahead and remove the banner, but I will put this on at the end so you can get a hold of Jennifer. I believe her contact information is on there. So if you need to get in touch with somebody for insurance, you have Jennifer. So Jennifer, so I've been hearing a lot of stuff like, especially in California, I know they're going through a horrible time with insurance right now. Tell us some of the reasons why the prices are going up so high.
A lot of it is actually consumer based. What I've been telling people is, and we kind of touched on it earlier, is insurance used to be a catastrophic loss policy. We all understood back in the 90s that home insurance was meant for catastrophic losses, like your fire, your flood, your tornado, and everything else was more kind of maintenance, But now we have seen significant increases in claims, and they're smaller claims. Like they're things that are $800, $1,000. So those small claims, though it may seem like, they're small, companies aren't going to get dinged by that, but you multiply that by thousands. So now insurance companies, last I checked, for every dollar that they bring in, they're paying out $1.19 in claims.
Wow.
So now, again, multiply that by billions.
Right.
In California, Carrie, we talked about it. Companies are leaving states They're like, no more, where it's not profitable. And so when companies are leaving these states, the ones that are left standing now, well, their risks are higher. So they're gonna, guess what, hike up those.
Yep.
So that's because the prices have been lower for consumers for so long that it hasn't really caught up to what was happening in the market.
Exactly. It's not, it's insurance is trying to play catch up with inflation because cost of materials, cost of labor has skyrocketed. I mean, even auto vehicles, I mean, now with these Teslas, electric cars, like it's easier to just total the darn car because, you know, to replace or fix it, it's too much money. So insurance is trying to find that fine line. But of course, you know, they're restricted by certain, you know, laws and regulations that they can't just hike up premiums significantly. So how they offset that is by placing restrictions. So like I'm going to use water losses. That's the easiest example. What used to, like, for example, if you have a home that had a water loss, it typically stayed with that client, right? It followed the client. Now it stays with the home. So you can have a new buyer come in, make this offer. Then insurance agent runs the numbers. There it goes. They have to find a water claim on that home, even though it wasn't the buyer's claim, it's still going to affect that buyer. And so if they either decline it, I know some carriers will take 2 or 3 or more, depending on the carrier, but most of them, I have a few, they won't take any new business that have any claims within the past 3 years. Okay. So that limits options.
So a long time ago, this did not happen recently. This has happened like, you know, I'm going to say 10 years ago. Mm-hmm. My biggest ones were little. They were having a party one night. Well, not a party, like a little kid party. They're watching TV, and the older ones were babies and the really little ones. And one of them had the toilet overflow, for instance, right? Mm-hmm. Oh, they stuck cars down it or too much toilet paper, what they did. I don't know, it was in my house. But anyway, I had little kids. So it overflowed, and I had carpet damage on my lower level. So that's kind of the claim you're talking about when you say water damage, it stays with the house, yes, and it's something that would go with the house. Mm-hmm. Okay. Yep. And you said 3 years normally is the
usually it's anywhere between 3 or 5 years, depending on the carrier. Now, when you're looking at the more preferred the carrier is, the stricter they become, right? But it's kind of one of those things. If you can get in, you can get great. You can get in. You have the great rates. You have the great service, like phenomenal. But at this, like now, it's gotten to a point where I have to pivot and educate clients like, well, we can keep costs down if you're willing to take on more risk, meaning higher deductibles and all that. And which, you know, back in the 90s, we all knew. I mean, I remember being in my 20s, I don't want to buy a house. I don't want that responsibility, you know, versus fast forward to 2025. Oh, I have food spoilage. Let's go file that claim.
So you were talking to me about that before, and I do want to bring that up because that's a really important thing. And in Washington, and I mean, especially here in Western Washington, we have really huge trees. And so for people who are watching this that maybe aren't aware of our weather and stuff like that, yes, we get I don't know, we get a lot of rain, but it's more to me, it's the gray that gets to me. Mm-hmm. But we do get these crazy windstorms that go through here occasionally, which we did a couple days ago. Or a week ago, whatever. And those trees are whipping around. We've got fallen branches. We have power outages. I mean, that's a normal part of our life here. That's kind of what we deal with. However, what you just told me, and this was a big topic on our, like on a Facebook group I was watching, because a lot of people were like, I'm without power. I just bought like a whole refrigerator full of food. And, you know, everybody's going, oh, just found an insurance claim. claim.
Oh, I know.
What would you say to that?
It depends. So if you have a big catastrophic loss, like for example, you have that tree that goes through the roof, yes, 100%, absolutely file that claim. It's justifiable. Like that is something that I can fight for with an underwriter come renewal time, right? Like nobody can control the weather, but it's the ones that were kind of making me, you know, like, oh my gosh, I hope that they don't. I intervene actually in some of those comments, like food spoilage. It'd be a shame. Like, yes, insurance is gonna, you know, they'll pay it out because you have the coverage, right? It's $500. Great, you have a $500 check. But now what you're gonna face with in like 6 months to 12 months is, are you gonna get non-renewed for that $500? Or when you go shop around, Now you're looking at a premium of $2,500, but it skyrockets to like $3,500 because of that $500 claim. So I think, as consumers, we just have to, re-educate, like, hey, insurance is meant for catastrophic losses. It is something that like is there because it will financially like burden an entire family. And but when you're talking 500, and I know, a couple of thousand is a lot for a lot of people, but it's nothing in comparison to what you end up facing down the road in a year.
That's a really good point. So yeah, I mean, because sometimes it is. It's like, a family who's just barely getting by, and I mean, it's been tight lately, and so I mean, it totally makes sense to like, oh, that would help out a lot, but really look at the long-term effects there.
Exactly.
And that. Oh, cool.
Yep. And it's proper planning, and there's a lot of great agents there, and it's just a matter of the agent explaining to them, because during the storms, I did have a lot of clients reach out, and I'm like, yes, you have the coverage, however, are you willing to gamble possibly getting renewed for this $500, or just kind of like, unfortunately, it's kind of, I hate saying this, but I find myself saying it a lot. It is what it is. It's kind of the health of the state that we're in. All of us are buckling down, and it's kind of, what do you do?
Yeah, we're having to pivot and look at the long-term effects of the choices that we're making with those claims. And I know for me, I can definitely advocate and recommend Jennifer for anything. I have a client that was in California, and I know she doesn't insure people in California, but she was willing to talk on the phone with me and help me and my client as well. Because when it comes to qualifying for a loan, if your insurance premiums are too high and you're already really tight on what your debt to income ratios are, and then all of a sudden you have this huge insurance deductible that you have to meet, or your annual, it can make it so that you no longer qualify for a loan. So they're really telling people, before you even start the process, we want you to get some type of insurance quote for the amount of money you're pre-qualified for or pre-approved for, so that we can work it into your payment and make sure that you still qualify.
Exactly. And then like I told you, Carrie, like the best way to help mitigate that too is I tell people, like, carry a higher deductible, right? And people are like, well, I don't have that kind of money. I'm like, yeah, well, it's either you can carry a lower deductible, pay a higher premium, or carry a higher deductible, take that savings, put it in a separate account. Now the money stays with you in your account, and it doesn't go to the insurance company for something that you may or may not use. So it's kind of, I think it's just changing the perspective. And
so it's kind of turning into like the medical field, or the insurance kind of like in a weird way, right? Is that what I'm hearing and understanding?
Yep. Exactly. It's because I personally carry a $5,000 deductible, because I know if I filed on my insurance, it would be for that catastrophic loss. And then the savings I have, I just put it in a separate account, so that way it's there if I need it. If it's not, then it's growing interest.
True.
Right.
True. So what happens what are some options? Are there options? I mean, because for instance, I know, again, we're talking California because they just had the wildfires and stuff like that. And I heard so many people had like no insurance because they weren't able to get it because they were in the fire zone or whatever. What are some other options if there's just like, we're not offering insurance, what do you do?
There really isn't much. There's not much at all. I mean, FEMA, but we all know how
Not working so well, is it?
Exactly.
There are state insurance companies as well, right, Jennifer? But they just carry a much higher deductible and monthly payment.
Yes.
So for those that are not insurable, that's an option.
Yep. And then what I'm finding too, and I'm actually learning from our landlord down here, because she's doing a lot of work, like cutting down trees, doing this. And it was funny because she's like, yeah, my insurance is saying if I want to stay with them, I have to put this automatic water shut off thing. And so she's doing all these upgrades to her home to maintain her insurance.
Wow.
I have heard that. So that could be another solution then.
Yep.
So talk to insurance if they're saying no, and maybe you can.
Exactly. Yes. And like so I'm starting to see companies like, they're kind of like, hey, if you're willing to take on more risk or help prevent more risk and invest in your home, I mean, as any homeowner should, then then we'll readjust or we'll renegotiate, whatever it may be. But I see the future being a lot more geared towards clients taking on more responsibility. Because at this point, if we're going at this rate, I mean, I always use myself for example. My home 10 years ago, my premium was only $400 a year. Now I'm paying almost $4,000, and it's crazy. And if we keep going the way we're going, we're just going to keep seeing those either restrictions or higher premiums. And Carrie, like you said, it's unfortunate to not be able to qualify for a home just because you can't attain insurance.
Right.
All right. Well, Jennifer, we so appreciate you coming on today. We haven't hit the top of the hour. Well, not quite the top of the hour, quarter of the hour. We appreciate you coming on, and we will probably be bringing you back on to be talking more to us, because it sounds like we can learn a whole lot more from you. We definitely appreciate you coming on today. Carrie,
I look forward to it.
I just want to thank Jennifer as well. She is a very busy woman. She still has kids, and she's a power mom, just working full time and being a mom full time. So we appreciate your time today. Thank you so much.
Thank you. I appreciate you both.
And if you want to get hold of her, again, the information's below. We appreciate you watching, and thanks for joining us.
All right.